Hi everyone, in this video, I want to answer a question or numerous questions that was sent out via all of the DMs that you have been sending me via Instagram and Patreon and via the comment section. I've been getting a lot of questions asking if the market will continue to go up this year, considering we've seen the economy start to open up, considering that the lockdowns and the recession and the pandemic is behind us from 2020. So, and I want to answer that by the charts, and I want to answer that also given and sharing what I think is going on in the economy. So, the common question that you guys have been sending out is, will the market continue to go up? Will we possibly see it go higher and end the year higher? To be very, very honest, I really believe no one has a crystal ball to predict how the market will be, how it will end, how high it will go, how low it will go, and what will be the specific movement of the market in a general basis. Please do note that the stock market is moving via sentiment over the short term, meaning when people are optimistic, no matter how bad things are, if people are optimistic, they will be willing to buy stocks at a higher price. In the same way, when people are fearful, even though the news or the narrative isn't as bad, but they are negative, they will sell and more sellers bring the prices down. And I don't know if you noticed this, or you can look at your own personal life, because even in my journey of investing and trading the markets, this would happen to me when I feel that things are about to get better, when I feel that uh, good news is coming, the economy is nicer, and then I look at the prices. Sometimes they're a bit high, but I feel a bit optimistic. It pushes me, it nudges me to think and be more optimistic. And there's a voice at the back of your head saying that kahit medyo mahal na yan, okay na, bilhin mo na. And that happens to all of us. That's why I keep hammering it that don't follow your emotions, because it's your emotions that will get the best of you. And if your emotions get the best of you, it will cause you to make mistakes in the markets. So going back to what I said, it's pretty much supply and demand driven over the short term. It's pretty much sentiment driven over the short term. But if you stretch it over a long period of time, it will be pretty much the fundamentals and the value of the company that will somehow no be magnified, and it's something that will be unleashed over the long term. Now, if you look at it also, that the 2020 lockdown, pandemic, the coronavirus issues, this is a one-off event. Meaning, I said this in a lot of the videos that I created in the past, that uh, the incomes, the sales of the companies that are listed, they did not get bad earnings results primarily because their businesses were bad. They got bad earnings results primarily because there was a pandemic, there's a health crisis, and there was a lockdown. That I would always say this, no, that the Philippines is a consumption-driven economy. As long as Filipinos spend, the economy will thrive. However, that's what was threatened. People lost jobs, remittances. People were scared to spend more, even if there were remittances that were relatively consistent up till the end of the year. People were trying to play it a bit safe, and that threatened a lot of our domestic consumption, which is a large part of the economy. So I said that over the short term, it moves via supply and demand. I also said that over the long term, it somehow no gets evened out by the valuations and the fundamentals of the company, and that last year was just a one-off event. But that being said, also the stock market is a forward-looking market, meaning when people foresee that there could be bad days ahead, they sell, and as they sell, even though it's not as bad, markets drop. And that's what we saw last March 2020. The drop, in my opinion, was valid, but I think somehow exaggerated also, to factor in the recession, the lockdown, and how economically hit will be a lot of the listed companies in the market. And as news started to come out also, as we saw the data start to unravel, and that's why we saw stocks or the market in general also start to go up. Please remember, uncertainty is what causes investors to stay in the sidelines. Meaning, for them to stay in the sidelines, it means they have cash and they're not deploying it, which means no one is buying higher. Or in the same way, as they stay in the sidelines, they have cash and they're selling it. And as they sell it, again, it goes back to what I said earlier, more sellers bring the prices down. So that's where we are. Now, fast forward to January 2021. I mentioned this in a lot of the videos last year that a couple of the things that you need to watch out for is consumer confidence. Are people somehow, some way starting to spend back again? Number two, I talked about the vaccine. And number three, I talked about the lockdowns. And fast forward to where we are right now, think about it. I mentioned this also in some videos that I would not go out last year. I would try as much as possible to stay safe. I would try as much as possible to just be at home. And that's why uh, I played a lot of video games in 2020 so that I would be forced to stay at home. And what's nice about the market is you get to do it at home also without leaving. That's why for those of you who are traders and investors watching this, we have to be grateful that somehow no what we do, it was not as hit as compared to a lot of those businesses that were brick and mortar related. But there, wala ako sasabihin ko. But there, if you notice it right now, more and more people are out, and I've noticed it even myself. I'm more confident now to go out, although still a bit hesitant, still a bit cautious. I still don't want to be congregating with a lot of people, but I'm more confident now than where I was April. When I would go out, I would do the groceries in at least in our house, no. As I start to do the groceries dati, naka-gloves pa ako, naka-hood ako, naka-mask ko, then naka-jacket ako. But now, things are relatively okay because why? The uncertainty of what the virus is, we already know it. We already know how to combat it. We already have figured out also how to stay healthy even if you go out. So I think consumer confidence is going back. Number two is we have the vaccine. And we don't have to vaccinate the entire population, but as more and more people get the vaccine, it somehow also gives us a sense that although I don't think we're going to go back to normal in 2021, but it somehow gives us the sense that hey, uh things are about to get better. It won't be as worse as March, April, May, June 2020. And number three, the lockdowns. As you can see, above and beyond mobility, it's not anymore as strict as what it was in April 2020. But that being said, as what I've mentioned, the stock market is a forward-looking market. Now, if you look at the charts, and you could reference all of the other videos that I posted in the past months, anytime there's any key decision or anytime that there's a key news that would push markets, there would be a reaction in the index in general. Now, as you can see right here on the left side of the chart, you see this lower portion. This was the threat of the virus. This were the lockdowns. Then, because of the exaggeration, because of the knee-jerk reaction that it dropped more than what it should, we saw a quick climb. Then the absence already of information, it started to consolidate. Now, as it started to consolidate, this large push up here was primarily because they started to open up Manila and some parts of the country. Please do note, no, around half of the economy of the GDP is basically Metro Manila, plus you add the Calabar zone. So I think that's 50, 60+% already of our GDP. So when you start to open that up, you start to make the wheels turn again in the economy. That being said, though, that push wasn't strong enough to break the 200-day moving average. And from June all the way up to somewhere here, October, we were still below the 200-day moving average. And for those who have been following the videos, I said how important the 200-day moving average is. And as we started to break out from that particular level, if you try to look at it, it coincides with all of this. and it showed you signals of bullishness. Even RSI at this particular point was relatively overbought, and they all aligned together, which brought the market into this particular uptrend. And there was a portion, no, at some point in the fourth quarter of 2020, foreigners started to buy. Although foreigners are still net sellers, there was a point where in 2020 they started to buy, and that's why we saw a blip. And while the markets were being bought by foreigners, what's interesting about that is this: value turnover started to pick up. There was a point when the market was dropping and it was so low that value turnover was around 3 billion, less than 3 billion at times. But now we've been hitting 8, 9, 10 billion on a very, very consistent basis, which from a market standpoint is something that's healthy. You want a lot of transactions because that means that there's somehow no a bit of conviction. And the way I look at volume is always conviction. The larger the volume, the more convincing the movement is. Those of you who attended our Stock Smart sessions know this, that volume gives legs to whatever breakout reversal that we are analyzing in the charts. Now, that being said, also, as we started to see the push, and by the way, no, this push also is not just because of what's happening in the Philippines. As you can see the dates here, this was the last week of October, right up to the second or midpoint of November, meaning at that point in time, news about the vaccine started to go out. And secondly, the uncertainty brought about by the US election was already out. So that's what I'm saying. Anytime there's uncertainty, you would see volatility. You would see also people who want to stay and be in the sideline. So it started to push up. Then after that news started again to subside, we were seeing the market start to consolidate. And for those who have been following the videos that I have been creating, I mentioned that we have been sideways since some point in November, which up until now is the current narrative of the PSEI. We are still sideways, meaning the market is also trying to digest some possible data, either of optimism in the next few months on how earnings, the economy will possibly go, or possibly triggers on the vaccine and the lockdowns. And again, the more open we are in the economy, the better it will be to have the wheels start to come up. Now, please do note also, since the GDP was negative last year, at least the growth we contracted, it will be very, very easy for the GDP to go up this year. So please don't look at it in a way now, whoa, the GDP is so high. No, because it will take some time also before we go back to the level where we were in 2019. Now, back to the central question of how I started the video. Where do I think the market will go? As what I said at the start, no one has a crystal ball. But what I do know right now, and which is very consistent to how I would always analyze the stocks, is I do know the main trend that we have right now is currently up. What I do know right now is we are out of the downtrend. What I do know right now that the reversal that I mentioned in the third week of October was very, very valid because it showed us reversing from a downtrend into where we are right now. And as of this point in time, the long-term moving averages supported by both GMMA and MACD as of this point in time are still showing bullish movements in the PSEI. Now, that being said, will that last up until the end of the year? That's why it's so important, if you are a person into the markets, at least you have an anchor that you could use on what will determine your signals. If it's technicals, then just follow the trend. And we do know right now the major underlying trend is it's still up. However, it's consolidating and sideways right now because it's trying to build a base. And part of any major uptrend is it needs to build a base. And what will protect it is from it going lower is we don't see it break down anymore. Because as we start to see it consolidate, should there be any positive news in the future, then that would give legs for investors to buy higher. Please remember, the reason why markets will go up is when you see investors willing to buy it at a higher price. And them willing to buy it at a higher price should be predicated on what they believe that either the news is or them forward looking that things will be better. So based from yesterday, also from a short-term perspective, nothing has changed. The main resistance for the short term is still 7307. The main support for the short term is 7040. And we are, if you look at it right here, still below at the very least. Let me move my chart. Here, the 20-day moving average. And that's what I want to share to all of you. No one has a crystal ball, but instead of trying to figure out where will things be, why not try to just focus on the trend or at least have a semblance of fundamentals based on what data you have in front of you. So that's it for now. This is Marvin Germo. If you have anything that you want to message me with, three ways in the comment section. Second way is via Instagram. I try to reply to 20 people, 20 messages a day. Then Patreon, I reply to every message that's there. All of that is in the description below. And lastly, if you want to learn more about this via my YouTube videos, via my books, or via the seminars that I have, we have that all in the description below to help you, to guide you, and to give you wisdom and insight in the markets. So there, guys, just a quick reminder before I let you go. No matter what I say here, please don't just transact or buy just because I say it. Please do your own due diligence. What I share here is data and information based on how I would analyze, but never is it a ideology na sundin nyo yung sinasabi ko. Don't follow what I say. Study, build your analysis, take the time to be skilled at it, because as you take the time to be skilled at it, that's what will help you grow your money in the stock market for the long term. So that's it for now. I hope you guys learned a lot from this. This is something different, but I just wanted to deviate no na hindi lang puro stocks by request yung ginagawa natin. But I wanted to share ideologies because I believe that's something that you can also use, the critical thinking that will help you trade the markets with confidence. But for those who are here for stocks by request, second channel, an hour from now, this is out by 10 p.m. So an hour from now, 11 p.m., that's when we will have our stocks by request. Most likely, I'll talk about APL, MRC, PHA, BSC, DITO, ABA, then maybe 2 or 3 US stocks, maybe NEO again and Tesla, and then Ethereum, by the way, hit an all-time high. No, so it's interesting. It's interesting to note that also for those who are positioned in the cryptocurrencies. So I guess that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.